Today we're diving into the fascinating world of artificial intelligence, or AI, and trust me, things are heating up. Remember when OpenAI launched ChatGPT back in November? The world went bonkers, using this free chatbot for everything from essay writing all the way to computer coding. And you know what? Big tech took notice. Microsoft dropped a multi-billion-dollar investment into OpenAI. I covered that in a video we did here on this channel. Not long after that, Alphabet, otherwise known as Google, joined the AI party by releasing their experimental AI service, Bard. And this past week, announced a whole suite of AI services coming this year. And of course, offering Bard to anyone who wanted access. Analysts say we're entering a golden era of AI, with machine learning, big data analytics, and computing power driving the industry's significant growth. Experts from Global X ETFs are super bullish about AI's growth prospects, expecting the market to reach a whopping $500 billion by 2024. Now I know what you're thinking. How can I, an inspired investor, get in on this AI action? Well, it's a bit tricky, as many of the innovative AI companies are either privately funded and not publicly traded, or are quite hard to pinpoint. So in today's list, we're going to keep things balanced. We've got 6 ETFs you can choose from with a variety of strategies, all carrying a basket of companies instead of just a few stocks. So without further ado, let's check out these 6 AI ETFs that offer exposure to AI companies or use AI for their investments. Oh, and be sure to stay for our last name on the list, which is an AI ETF that uses AI investors. Talk about a meta concept. First on our list, we have Global X Artificial Intelligence and Technology ETF, ticker symbol AIQ. Now, AI has countless applications driving growth across the tech industry. And if you're looking for a broad AI play, AIQ is the one for you. It tracks the Index Artificial Intelligence and Big Data Index, featuring some familiar big tech names like Meta Platforms, Nvidia, Tesla, Microsoft, Alphabet, and Apple. These giants are either developing or using AI in their products and services, making them less risky investment compared to smaller AI stocks. Keep in mind though that AIQ comes with a whopping 0.68 expense ratio, so you might want to check out Google Finance for the top holdings of AIQ and just buy some shares in those of the top companies instead if that expense ratio scares you. Keep that in mind for when we're looking at other ETFs on that list if the expense ratio of these newer innovative ETFs are too high for your wallet. Moving on to the next AI ETF on our radar is the Global X Robotics Artificial Intelligence ETF, or BOTZ. AI and robotics are like two peas in a pod. This ETF lets you capitalize on both trends. It tracks the Index Global Robotics and Artificial Thematic Index and boosts a diverse range of companies involved in AI, industrial robotics, automation, and autonomous driving, all for a 0.69% expense ratio. What's interesting about BOTZ is its higher allocation to industrial and healthcare companies at 38% and 16.2% respectively. This showcases the growing use of AI and robotics in these sectors. Analysts believe that AI has the potential to transform healthcare, transportation, and manufacturing industries. So keep an eye on this ETF if you want to ride the wave of AI-powered solutions. Next on our list, we have the First Trust Nasdaq Artificial Intelligence and Robotics ETF, ticker symbol ROBT. It's important to remember that some AI ETFs might be more like closet growth index funds with expense ratios similar to actively managed funds while mostly investing in major tech companies. But that's where ROBT stands out. It tracks the Nasdaq CTA Artificial Intelligence and Robotics Index and follows a stricter set of criteria from the Consumer Technology Association to identify qualifying companies as AI or robotics enablers, engagers, or enhancers. This means ROBT's portfolio has less big tech exposure than BOTZ or AIQ, making it an interesting alternative, and it comes with a 0.65% expense ratio, so be sure to check out its holdings for some great individual stock ideas if the expense ratio is too high. Now let's talk about another option for those looking for a broader bet, the iShares Exponential Technologies ETF, ticker symbol XT. If you invest in a diversified stock portfolio, you probably already have some AI exposure, either directly or indirectly. XT holds 197 global tech companies tracked by the Morningstar Exponential Technologies Index. This ETF covers 9 themes, including cloud computing, robotics, and big data analytics, all expected to benefit from AI advancements. Plus, it comes with a lower expense ratio than the previous options at just 0.46%. So if you're looking to broaden your AI horizons with a diverse range of tech companies, XT might be the one for you. Next on our list, we have ARK Autonomous Technology and Robotics ETF, ticker symbol ARKQ, for those who prefer an actively managed approach to AI investing. Although not a pure play ETF, ARKQ zeroes in on industries where AI is expected to make a splash, like autonomous transportation, robotics, and automation. Unlike other names on this list, ARKQ is not tied to any index, so the management team can swap stocks based on their research and outlook. With ARKQ's forward-looking growth focus, it's likely that the ETF will recognize AI stocks as an emerging theme to add to its portfolio. Back in 2020, ARKQ saw impressive returns riding the wave of explosive growth in the electronic vehicle industry, thanks in part to its Tesla holdings. Keep in mind though that this ETF does have a higher expense ratio at 0.75%. So if you're into the actively managed ETFs and eager to explore in the AI landscape, ARKQ might be the right choice for you. Last but not least, and probably the most intriguing ETF, is the ETF-MG AI Powered Equity ETF, or AIEQ, for those who want that meta approach that combines AI with finance. Chris Natividad from Equibot explains that AIEQ uses the IBM Watson and other AI tools to select 150 stocks with the highest probability of market appreciation over the next 12 months. As the fund learns from every trade, its best days should always lie ahead. Now, what's fascinating about AIEQ is that its AI can analyze millions of data points across news, social media, analyst reports, and financial statements to create and manage its portfolio. The ETF assigns scores to companies based on various factors, emulating the work of human equity analysts, but with less potential for biases and errors. Keep in mind though, that AIEQ comes with a relatively high expense ratio of 0.75%. But if you're into the idea of AI managing your AI investments, AIEQ may be the perfect match for you. Now, before I let you go, let's talk about the risk and limitations of AI ETFs since the AI industry is still in its early stages. It's crucial for potential investors to be aware of the possible pitfalls. 3 main areas of risk: regulatory, technological, and market. Regulatory risks come from the potential changes in government AI policies. Just this month, Vice President Harris met with the technology industry leaders to discuss potential regulatory issues with AI. Technological risks stem from AI malfunctions or failures. and market risk arise from the shift in investor sentiment toward the AI industry, potentially leading to losses in AI-related investments. Some experts also point out the limitations of existing AI-themed ETFs, particularly when it comes to exposure to pure play, up-and-coming AI companies. Many times, the largest AI ETFs may not always provide a clear benefit from AI services, making it uncertain whether these stocks will lead to more differentiated products or a better competitive position. Additionally, AI is a niche and underdeveloped industry within the tech sector, which could expose it to higher volatility than the broader market. Analysts explain that a concentrated bet on AI compared to a more generalized bet on technology companies means that future returns and risk will likely differ from those of the market. Investors should always be prepared for a potentially higher downside and more volatility and size their positions accordingly. AI is an exciting investment opportunity. Make sure to keep these risks and limitations in mind, and as always, subscribe to our channel for more investment inspiration.